Good day, everyone. Welcome to the weekly note. I'm going to try and sort of blast through this very quickly because I'm getting started a little late, actually. Just remember, if you're sort of new to this, many firms have a weekly note or a daily note, something they put together, sort of cements it into your brain about things on the calendar or the way any particular firm is looking at various markets. Since I am the senior partner in another closed private proprietary firm, we do this, not unique to us. We do a weekly note, we do a daily note. And again, the purpose is to lock into your mind, as you begin the week, okay, what's coming up? And as well, how to think about various markets for ourselves. For the way we approach things, we are interested in the calendar, what's coming up on the calendar that could influence markets. We are very interested in interest rates and the curve, even though this is pure equities, right? I'm not talking about trading the curve. I'm talking about we want to know. And at the same time, we look at various major markets. And again, the reason for that is not to place individual bets. We talked about that last week. It's for a bias, right? For instance, last week, we've mentioned this. I don't think we've changed much of our stance on markets except for junk. But you have a bearish bias on equities. Well, that's going to color your other decisions. And the other real advantage we found to this, and I know people who have followed our stuff or myself for years know that I do this. I like lining up all the major markets or a lot of major markets, right? I like looking at equities, interest rates, commodities, even though this is just purely equities trading, right? Commodities, junk, oil, right? When you line all those markets up and you look at them as a whole and you put it in your brain through either a weekly note or a daily note, it helps cement in your brain sort of what is the landscape. People are like, oh, well, how do you have a various read on markets? Well, a lot of it has to do to having the discipline to sit down and have a weekly note and a daily note and just locking it into my brain. Okay, what are all of these major markets? Where are they at? What are they doing? What's our bias? Not individual bets, but our bias that can color individual bets we make or approach to processes or individual trades. And okay, I see how the whole landscape of many markets is functioning at the moment. It's something I've always found immensely helpful. All right, that being said, the weekly note for what is this, October the 1st or October the 2nd, 2023, for that week, we're going to first look at the calendar. For the calendar this morning at 10 a.m., we have ISM manufacturing PMI. And remember, this is what sort of stands out to us individually. Other people may find other very important things on the calendar. This is just the way we look at things, right? Thus the hands thing, right? So look over our shoulder. So anyways, 10 a.m. ISM manufacturing employment. And we don't pay attention to every move of the Fed, but Chairman Powell is giving a speech at 11 a.m. That could have some import. So there is that. Nothing really on Tuesday, I see. On Wednesday, we have ISM Services PMI. And I don't think there was anything else that I saw except for Friday, of course, it being the beginning of the month. Very obviously, Friday, we have non-farm payrolls. Also, as you know, we look at the SOFR curve. The main news there as of late has been the Fed raising their guidance for inflation. And we've also been seeing that in actual volume coming into later parts of the SOFR curve. I find very interesting. I didn't notice that. Actually, a business partner of mine noticed that. He said, hey, have you seen the numbers that are out in 2024, 2025 in that whole window? So what are we talking about if you're not familiar with the SOFR curve? In other words, we're looking at interest rate risk, right? Which is very obviously tied to inflation. And therefore, a lot of bets is that predictive? No, we're not talking about a prediction. But is that indicative that a lot of people are wondering about risk for inflation staying with us a lot longer? Yeah, I mean, you're seeing it in that 2024 to 2025 window. Looking at something like the Treasury curve, and as we'll go on to discuss here a little bit later, holy inversion. But that's, I think, why you're seeing what you're seeing, farther out on the Treasuries curve. As we mentioned last week, we have a proprietary model that just looks at risk on, risk off, right? As we mentioned last week, that model flipped over to risk off, and it flipped over in a very hard way, and we remain that. So looking over that It's a proprietary model, but it's ours, right? It's nothing overly complex. It's just a broad general bias. It is still risk off. Looking at the VIX that we have here, so like 1804, 1837. It's been around there. It's very obviously warming up, but we also look at VIX term structure. We haven't seen too much there that's popping out at us. Maybe other folks with their processes see something different than we do looking at VIX term, but we generally don't see a lot raising any alarm bells when it comes to VIX term. Looking over at the SPOOs. As a note here, somebody mentioned this to me last week, and I want to say it here. This is the SPX. I say SPOOs to everything, okay? I know some people are very specific in their terminology. It's a carryover from the old days, right? The big S&P 5 contract, the SP. I got my start in futures, and then I moved to equities and futures. I refer to everything as a SPOOs. If it's S&P 500 index related, sorry if that throws you off somewhat, but it could be the SPX, it could be the spiders, it could be IVV for crying out loud, and I'm going to refer to it as the SPOOs. It's just a hangover in my mind from the old days. Regardless, S&P 500. Last week we had moved over to bearish. We remain bearish. Remember, this is bias that can color other decisions or programs that you may have in place, gray box programs, or individual bets. And we have a bearish bent on equities. Looking at equities that are paying a higher dividend and at the same time lower volatility, something like SPHD as far as an ETF that sort of looks at those as a conglomerate view, we are again bearish or bullish on yield, since this is an instrument a lot of people look to as far as yielding instrument apart from just return. We are bearish on price, bullish on yield. And we always look at treasuries. I was talking about treasuries a little earlier. We just sort of go through it like from the front of the curve to the back. We use ETFs to view them as a proxy. One thing I will say, I think there's some tips protection and other things that go on in SHY when you're looking at the front of the curve. As far as an equity representation, so that needs to be kept in mind, okay? But looking at something like SHY or 1 to 3 year, we are neutral. So we have a neutral stance on price, obviously neutral on yield. Now this is what I was talking about a few minutes ago. Doesn't matter, and we'll run through these real quickly. 3 to 7 year or IEI, IEF, or TLT. We have a bearish. We are bearish on price, just as we were last week. I don't think much has changed from last week. We are still bearish on price, bullish on yield. Think about it in terms of that treasury curve, and especially if the market's starting to get concerned about inflation staying with us for longer, or as I've referred to it for weeks or months now, a repeat of 1977 to 1980. Yes, we had a nice single inflationary print, but you got to put a lot of those together. If the market is genuinely concerned about a repeat from 1977 to 1980, inflation come roaring back or staying with us for longer, then you look at that inversion and or if even if this whole narrative of a soft rebound happens, right? Like, how can you be bullish on that part of the treasury curve? I just don't understand. So we remain. I expect to see a relief rally at some point, but you know what you do with relief rallies and downtrends, right? So again, from IEI all the way out to TLT, or like 3 to 7 year to all the way out to the end of the curve, we are bearish on price, bullish on yield. You look at something like emerging market debt markets, view them, all these emerging debt markets, as sort of a conglomerate whole. You can look at something like PCY if you wish to. Again, here, we are bearish on price, bullish on yield. Sort of the same thing for emerging markets. If you want to look at emerging markets for equity prices, emerging market stocks, right? We are, again, bearish. Here's one I have been anxious to turn bearish on. This is junk. You can look at junk in a number of ways, but I may be a little early, but I'm saying that we're going to switch over to a bearish bias on junk prices, bullish on yield. This market has confounded me for a long time, though, so take that for what it's worth. Commodities. Commodities, you can look at any number of ways. GSCI is very popular, GSG, DBC, however you want to look at commodity indices as a whole. we remain bullish on commodity prices as a whole. When we think about crude oil term structure, we are at a premium. Now let me say something, or we're in backwardation. Let me say something about that. There is a split of thought, right, about how to view backwardation. All backwardation basically means is there is a premium right now. Actually, hold on a second. Let me check it on my screen. Bring up the crude oil curve here on my other monitor. Okay, yes, we're still in backwardation for crude oil. There's a split. I was always raised, and guys that sort of I hung around with would view this as bullish, as an overall bias, not on oil, but as an overall bias. All it generally means is that people are paying more now for the contracts now than later, which is unusual, right? Usually you have things like storage, you have things like insurance. So if you're talking about like June 2024 oil, where there's more storage costs there's more insurance, there's more transportation costs, so that should be going for more. Well, that's not the case, very obviously, in backwardation. Some people do not view that as bullish, or you shouldn't have a bullish bet. It's just an overall environmental view, and especially what's currently going on in oil markets. We view it as bullish. Right, so there's two segments. One's like, no, just view backwardation as backwardation, and it's an environmental view. And there's another view that's like, no, that's bullish because people are willing to pay more now, like right now, for November oil than say December or January or February or further out the curve. They want it, and they want it now. Two schools of thought. You're going to hear me sometimes say bullish. Heck, that's even on when you take series tests. I'm talking about, for getting registered and things like that. When you take actual tests on this stuff, like I know on the Series 3, that's the way they tell you to think about it. And there are two schools of, thought. Like I was always raised with that as a bullish overall view. As far as a bias, doesn't mean you just go in and buy, but it's just a bias view. Remember, we've talked a lot about the difference between a bias and a bet. So that's crude oil term when we look at crude oil term. But looking at crude oil specifically, we are still bullish. We're still bullish on oil prices. Something like gasoline, I'll tell you, I'm still neutral, even though we've gotten this break below that structure. Remember how I didn't turn bullish when we got the spill? I'm very tempted to turn bearish in an overall bias on gasoline prices. I'm not yet there. I could literally turn that way tomorrow at our firm in like the daily note. I'm like a hair's breadth away from turning bearish on gasoline prices, but for now we are neutral. And thank God we have finally switched over to bearish on gold. So we were neutral for the longest time. We did switch over to bearish on gold. Unfortunately, we are still neutral on silver. So silver prices, we are still neutral. Really hoping we can get a really good dump in silver prices. But for now, we are neutral. And the US dollar, we remain bullish. We've been bullish for a long time now, and we remain bullish on the US dollar. So that has been our look at the calendar, SOFR curve, treasuries, and our thoughts. And now do you see, if you do this often and you line everything up, I mean, bearish on equities, come on, the treasury curve where it's at, crude oil, what's going on in crude oil right now, do you see how that can build an overall view in the landscape of all markets? And then when you go to make equity bets, it definitely colors your view. That's why it's very important, we think, to do a weekly note, along with millions of other firms out there, a weekly note and a daily note. But for now, that has been what it always is. It's a look over our shoulder. Our thoughts are good until they're canceled, thus GTC. And they have only been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.